Welcome to the Local Real Estate Show. Join us each week as we hear from local real estate professionals from around the country. We'll hear their stories, get their advice on the current market trends to the best ways to get the most out of your real estate purchases, sales, or investments. Whether you're just getting started and buying your first home or you are a seasoned real estate investor, there's something here for everyone. So buckle up and get ready to hear from the people who know the real estate industry the best. Now your host, Steve Champagne.
Welcome, everybody, to the Local Real Estate Show. This is Steve Champagne, and today I will be having a conversation with Rich McDowell of One Synergy.
Synergy One.
Synergy One lending out of the Denton area. Welcome to the show, Rich.
Hey, welcome, Steve. Thank you.
So let's get right into it, Rich. Why don't you start off telling me a little bit about yourself and your background?
Yeah, absolutely. So, Rich McDowell with Synergy One Lending, been a mortgage lender for a little over 18 and a half years. Prior to being a mortgage lender, I served in the United States military. So I do love veterans and VA loans, and we'll get into that down the road. But Rich McDowell, I've got a wife and two kids here in the Denton area, and it's been fun.
Are you originally from the Denton area?
No, Dallas actually. So Dallas Fort Worth proper, and after I left to the military, I came back and moved up this way.
What branch?
United States Army Infantry. So I was actually a ground pounder back in the day.
Okay, well, thank you for your service.
Hey, no problem.
All right, so many careers. How'd you get into mortgages and home loans?
Yeah. So post-military, I went into the car business, car financing, and a buddy of mine's like, man, you think we make good money on car financing? You should try out the mortgages. And so that happened in 2000. And, you were taking people from some extremely high interest rates and, lowering the rates quite a bit. And, that just was a natural fit. I know we've talked about this before, Steve. I still believe it's the American dream to own a house in America.
Okay. How long have you been a loan officer?
Yeah, so loan officer careers spans over about 18 and a half years through since 2000. I took a little break in there in the hiatus of 08, 09.
Okay, during the bubble.
During the bubble, and had a child at the time, and it was scary times, as you remember.
Oh yes, yeah. We thought the world was coming to an end on that, but things do have a way of turning around, which kind of leads me into this next question I have for you. Is
okay.
We've come off our last couple of years of record real estate sales, really low interest rates. Where do you kind of see the mortgage industry going, and mortgage rates in particular?
That's a great question, and one that we get asked a lot. I would tell you my hope or my expectation is interest rates are going to be somewhere in the neighborhood of 5 to 7%. I think that's a healthy real estate market. I think it's a healthy economy when that happens. It took 100-year pandemic to get us down in the 3s and 2s. So overall, I would say, my guess over the next, 5-10 years would be interest rates between 5 and 7.
And you think where home prices are, that they'll still be an affordable mortgage or monthly payment for the average person?
That's another great question, one that probably does concern me, the affordability of housing, and even, for argument's sake, rents. For folks coming out of college and folks getting in the workspace, it takes a lot of money to pay for either one of those. And so affordability, I know from talking to builders and other communities, we're trying to make sure that there's great first-time home buyers, properties.
Mm-hmm.
I think it's difficult with the cost of labor currently, cost of materials, cost of housing in general. But I also know there's a shortage in real estate as well.
Okay. Well, what I like to get out of this show is give some good, solid advice and get some answers for the first-time home buyer. Okay.
Perfect.
So I have some questions here that the typical home buyer, especially if they're a first-time home buyer, they're probably going to want to know these answers. So do you mind if we run through some
No,
frequently
no,
asked questions?
I'd agree with
So
that.
what is the different types of mortgages that are available to someone who's looking for buying their first home?
Perfect. So there's conventional financing, which is typically as a first-time home buyer, you can put as little as 3% down.
Okay.
When I say 3% down, if just for argument's sake, you take a $300,000 house, that's $9,000. Your down payment to get in a $300,000 house is $9,000. There's some values and benefits to rates and other fees associated with that being a first-time home buyer.
Mhm.
So as far as the type of loans for that, I would tell you conventional FHA, which is a government-backed loan,
Okay.
VA, which is a veteran loan, USDA, which is a rural loan, would be your four main loan terms or loan products. And then depending on where you fit in that, your first-time home buyer would qualify for those.
Okay. Um, Typically, you kind of had this in your first QA we answered, but how much do you need for a down payment typically? Sometimes I hear
Yeah,
like
I would
2%.
Yeah, that's one of those old myths that we wish we could break, because I think a lot of people wait on the sidelines thinking they need 20%. And so in that same scenario of a $300,000 house, you're looking at 60 grand if that's the case, right?
Yeah.
So that's not accurate. So a true first time home buyer, meaning they have not owned a home in 36 months, they
Mhm.
can put as little as 3% down. I would tell you the average down payment for first time home buyers is 3.5%.
Okay. Um, there's this thing out there called PMI insurance.
Yes, sir.
What is that?
Yeah, great question. PMI is private mortgage insurance. Well, what does that mean? It's not about your property and casualty. It's not about your other insurance that you would be required to have on the home. It's you're paying an insurance so that you won't default on your loan. And if you do default on your loan, the bank makes their money. That being said, is you can also buy out PMI based on your loan that you qualify for as well as credit score. So, for instance, you say, "Hey, I want to put 5% down. I don't want to do PMI." There's a cost to buy out PMI that, again, you talk to your loan officer about and figure out what's the best approach for you.
Okay, but typically, my understanding, if you're putting less than 20% down, generally PMI is something that's required.
Absolutely. Yeah. Less than 20% down PMI is required on the loan unless you do buy it out.
Okay. So other than say PMI, if you're a first-time home buyer, what other closing costs are there associated with getting a home loan?
Yeah, absolutely. So it's kind of a combination of two. You have your down payment. So again, if you're looking at the 3 to 5%, that is
Hmm.
costs that you have to pay to buy the house. And then I would tell you you've got an additional 3 to 4% max on closing costs, meaning your taxes, your insurance, your title fees, lender fees, appraisal fee, just all the fees that are on a closing. I would tell you expectation would be 3 to 4% of the purchase price.
3 to 4% of the purchase price in addition to your down payment. Okay, that's
Yes,
good.
sir.
That's good information for that. Um, I remember a long, long time ago, you needed all these documents. Then there was no doc loans. Where are we with documentation today when it comes to a first-time home buyer, and what type of documentation are we looking to see?
Yes. So the no doc stated income loans have long gone. We didn't like them. We didn't do well with them, and the industry as a whole got rid of them. Um, as far as documentation, the simplest way, as far as just minimum expectations, I would tell you 2 months of bank statements, 2 years of employment. So you got 2 years of employment, 2 years of bank statements, and 2 years of W-2s.
Mhm.
That kind of gives us a good indication of what you've made over the last 2 years, what you have as assets, as well as just what you can afford.
Let's expand upon this a little bit. Let's say I'm a self-employed person. Um,
Okay.
Generally, a W-2 may not be. Maybe I'm a sole proprietor and I'm not
Right.
issuing a. So, what type of documentation would be required for someone like that?
Yeah. So if you're self-employed, you're going to go 2 years bank statements. So instead of the W-2, you'll just have 2 years, excuse me, I said bank statements, tax statements. You would just do 2 years tax statements.
Yep.
The kind of the one piece or big asterisk there. One of the values for being self-employed is you get a lot of write-offs. One of the negatives of being self-employed, you get a lot of write-offs.
No.
so
Yes.
so
Yeah.
when we're looking at it from a lender standpoint, we look at it as your taxable income.
Hmm.
So you could make $200,000 a year, but if you pay taxes on 45,000 is the number that we're going to utilize for your income.
Which leads me into another question.
Okay.
What is a debt to income ratio? This is like something, I
Right.
hear lenders and mortgage guys kind of tossing around. What is that?
So when we look at debt to income, I won't go down my soapbox on that, but debt to income for the masses is you take your total gross pay. So this is before 401ks. This is before any medical deductions or anything of that nature, and that is your gross income. And then we look at it as what is your total debts, not total indebtedness, but just total debt. So, for instance, you have a credit card that has $10,000 of credit on it, but you're only paying $25 a month. We're counting the $25 a month against your debt ratio, not the 10 grand. So what the world likes to see is obviously the lower the front end debt is to the back end is what they like. So for instance, you would hear typically is 3643, meaning your housing expense is 36 of your percent of your gross income. Your
Mm-hmm.
total debt's 43% of your total debt income. Uh, there are programs up there that go to 50%. But again, we need to discuss that to see if you're truly comfortable with that. Because what it doesn't show or doesn't, give us is what your expenses are for groceries, utilities,
Yeah.
things of that nature that aren't on your credit. We're just going off of your credit debt to what your income states.
Okay. Which kind of leads me into a question is, what is the ideal debt to income ratio that, a first time home buyer should have?
The guidelines will let you go up to 50.
Hmm.
The closer you are to 50, the higher credit score you need.
Okay.
Um, if you want to just look at a standard aspect of it, is a 3641. With the right credit score, typically gets you approved.
Hmm.
There's typically a comfort level there for, so I would tell you ideal 3641, but you could go up to 50 depending on the loan program and credit score.
Okay. So you've been throwing this word out, credit score.
Yes, sir.
And is there a difference between a FICO credit score and credit score? First of
Yes.
all, is there a difference?
Yeah. So, if we were kings for a day, what we would change is everybody have an idea of what their credit score is.
Hmm.
Um, the consumer facing credit reports. So not trying to, put just the ones that you hear out there, uh, anything that's free, mama always told us things that were free, be cautious of.
Yep.
That they're consumer facing, so it's not what a lender is going to look at. If you're trying to afford a $300,000, $400,000, $500,000 house, we're not looking at your consumer credit. We want an actual FICO. So there is and are credit cards that give you FICO. You can actually go out to myfico.com and get your scores.
Hmm.
Those are going to be more indicators to what lenders see.
Hmm.
But a lender will pull a tri-merge credit report, and we take the middle score of the three. So for instance, we pull credit, let's say it's 750, 700, 650. Your middle FICO, your middle credit score of what we're going to utilize is 700.
Got it. And you say so there's three major bureaus out there that you're pulling from.
Yeah, so you have TransUnion, Equifax, and Experian.
Okay.
The perfect score is 850. The lowest, I think, just to get your name on the paper, is 350. Most lenders require 620 and higher for a credit score.
Mhm.
There are loan programs available under 620. Just know that they come with their own criteria because they're under a 620 credit score. But, credit scores, like I said, just go up all the way to 850. So the closer you are to 850, the more premium credit you are.
Mhm.
The lower you are off of 620, just makes it a little bit more challenging for us.
You've done a lot of loans. What would you say is the average credit score that you're seeing that a first-time home buyer should, they probably have to do some cleanup. They're not going to go for the 850, but maybe they're like 650,
Right.
and they need to, if they got to 700 or 725, how does that affect their mortgage?
Yeah, I looked at actually. I know my average credit score last year was 714. So of all the loans I did last year and all the credit I pulled, the average was 714. Um, most, if you'll watch your debt and pay your debt on time, your credit scores, as a nation, Steve, we're better today credit wise than what we were in 2008, 9.
Mhm.
um, they've really made some smart decisions for us, and we're all aware of what credit is and how important credit is. So I would tell you, the average for me at least was 714. I would tell you national average 680, 686, somewhere in there.
Okay. Um, Big impact on your mortgage rate? Would you?
Could be. For instance, let's look at a quick scenario. If you're 686, I'm probably looking at an FHA loan for you.
Mhm.
If you're 714, 724, I'm probably looking at a conventional loan for you.
Okay.
So, you could have, conventional first time home buyer, you're at 3%. FHA, you're at 3.5%.
Mhm.
Um, FHA, back to the MIP question, has MIP for life,
Mhm.
not just when you get to equitable position. So
Mhm.
there's some values, there's ebbs and flows of both of those. But I would tell you that obviously the higher the credit score is, the better it is for, your financing options.
Okay. Well, that wraps up the Q&A portion of this interview. Hopefully,
Awesome.
first-time home buyers will get some insight on what they need to do when it comes to getting ready to buy their first home. All right, so you have a lot of competition. There's a lot of loan officers out there. There's a lot of lending companies out there. What makes you different from your competition?
Steve, that's been a great question over the years. I utilize a analogy like you go to a hotel, you expect a clean room, security, all
Mhm.
that sort of stuff. And likewise, when you call a lender, I would tell you what truly makes me different is my approach. Um, your loan is the end result, but what are you trying to accomplish by getting your home? Are you just trying to say, "Hey, I'm tired of renting and I need to own a home"? Are you doing it as an investment? Are you doing it to create wealth? What are you, what is your motivator to buy a house? And so what I say with that is, most of us will say, "Hey, just go out to my website, fill out an app, and I'll get back with you." Let's take 15 minutes, 20 minutes and understand what you're trying to accomplish. Then let's come up to a path to qualification, make
Mhm.
that happen so that when you go and put that offer in, you know what to expect. So in short of answering that, I guess what I would say is my commitment, or what differentiates me, is I'm looking at your wellness of health, or wellness of wealth, excuse me,
Mhm.
and making sure that what you buy is something that 6 months from now, when you're in your backyard, you're
Mhm.
not stressed out that, oh my
Yeah.
God, I've got a $3,000 house payment and I can't
I
afford
bought
it. Now I'm
I
going to lose
bought
my house.
I bought too much house.
Right, right. So, and for all of us, right, take care of the client. The client's going to speak about it. We're going to get the referral, and we're going to be able to take care of, other friends and families of theirs.
So you do mortgages, home mortgages, where everything is tied to the equity of, or the asset, I should say, of the property. Do you do any other type of home loans that you can make
Yeah.
available to customers?
So I would tell you from the license aspect of being a licensed loan officer, we can help with your primary home, your secondary home, your investment home. Uh, Meaning, do you want to? You got a kid that's going to college. Do you want to set up real estate for them as they get a duplex,
Mhm.
start building wealth there? So, as far as it all has to be tied to a mortgage, like I don't do any payday loans, signature loans, anything like that.
Okay.
All the loans that we do is, based on mortgages.
Okay, so basically the property. Um, During our pre-call, you mentioned something about HELOs, home equity loans. What is the deal with that
Yes,
in
sir.
Texas?
Yeah. So actually, Texans had to make a, constitution amendment in 1997 to allow Texans to take out equity in their home.
Okay.
So let's say you bought a house 4 or 5 years ago, you're sitting on a hundred or $200,000 of equity.
Hmm.
We would be able to take that equity for you, and you could
Hmm.
cash out and either go buy another home, pay off some debts, put your kids in college. So it's an opportunity to take out equity against your property that you've been paying on.
Okay. So that's something you could do too if someone was looking for that type of loan.
Yes, sir.
Okay, great. Well, that kind of
Yes,
wraps
sir.
it up. The interview. Thanks for coming on the show. If someone wants to reach out to you who's watching this
Yeah.
interview, how can they get a hold of you?
Yeah, so it's Rich McDowell with Synergy. You can reach me on my cell at 214-228-4114. And you can always go out to www.richmcdowell.com.
Rich, thanks for being on the show. And until next time, folks, all have a great day. Take care. Bye.
Thanks. Bye.
You have been listening to the Local Real Estate Show. If you are a real estate agent, a mortgage broker, or a closing company and would like to be a guest on an upcoming show, please visit thelocalrealestateshow.com for more information. Thanks for listening.